Hey guys, John Paulamy here, Actionable Intelligence. Today's Saturday, August 17th, 2019. In this week's reality check, kind of wanted to go over a couple things. I think they kind of tie together as one thing influences another. I'm not going to get too deep into these things except to say that I'm looking at this news of this WeWork IPO. WeWork, if you don't know, is a company that provides workspaces or shared workspaces. Basically, the company goes out, leases a bunch of stuff, builds these office spaces for, and people rent them from them. I guess that's the business model. And they have all these perks in there: craft beer, dog treats, yoga, all this stuff. Anyway, basically the company's been around for about a decade. It's never made money, and it's the same model that a lot of these companies have come public recently. They supposedly have disrupted a space like Uber and Lyft, Airbnb. Now we have this WeWork outfit, and the more you read about it, it's just not a good deal. And it's just, I think, symptomatic of this age we're in that has been just totally corrupted and allowed and fostered and enabled by central bank intervention in the economy. What do I mean by that? I mean, would these companies even exist if there wasn't all this cheap liquidity around? I mean, I don't think they would. Where would they get the financing? I mean, what has happened as over the last 10, 11 years now since the great financial crisis, and the central banks around the world have lowered rates so low that people cannot get a decent return anywhere. You have to get a return on your money. I mean, if you're a retiree, if you're a pension fund, if you're an insurance company, whatever, you need a return. And there's just, you can't go out and buy government bonds. That's what people used to do. They used to go out and just buy government bonds, and they were 6 or 7%, or they would, buy these things and hold them, clip coupons, if you will. And now that doesn't exist. If you had $1 million portfolio, or or $500,000 portfolio, you had it on government bonds or CDs, and you're getting 6 or 7% a year. You were getting 30 grand a year, and on top of your Social Security, you could live pretty good. Now it doesn't exist. I mean, you get 0%. You don't get anything, a few pennies, on your savings in the bank, and forget about any kind of real return just from being a saver. So people are having to go further and further out on the risk curve. And this is what the central banks wanted. They wanted people to go out farther and farther and be riskier and riskier to stimulate the economy. Having an economic downturn or a recession is a good thing. It allows it's like underbrush in a forest. It's allowed to be cleared out so you don't have a massive forest fire. And now we've short-circuited that with this, we can never have another recession. We can never have a down year in the stock market, vision that seems to be out there, or ideal. And, now we're forcing people out onto these risk curves, and people are buying, emerging market debt, triple B rated debt, investing in a lot of goofy companies like this that don't make any money. And of course, it's all justified. You can listen to the pundits, you can read about it, and this time it's different. You don't understand, John. They're disrupting the real estate market. Well, that's great. I'm happy for them. It should be disrupted. There's a lot of friction in the real estate market. But I don't know why I can't go, if I'm going to hang out a shingle as an attorney or some business, and just go to a strip mall and negotiate my own, terms. Why do I need to go to WeWork? I don't get it. So, what seems to be the business is they go out and rent all these buildings long term and then try to sublease them short term. And that's fine, if the economy seems to be growing or if office space is short, but eventually you have recessions. And then what happens? In a company that's never made money, it loses money every year. And then if you read deeper, the founders of this company, they have really some nefarious, in my view, weird relationships with the company. I mean, I think the guy that's the CEO has like $300 million in debt that he's taken out to whatever he does with it. And he's pledged his, a lot of his stock. That's great if the stock is up, but what happens when the stock goes down? So what we have here is it's symptomatic. You come up with a good idea. And I know a little bit about this because I do some seed investing. I do some angel investing. And the model is grow, grow, grow. That's what all these, angel syndicates and these venture capitalists and these private equity firms, they want you to do. Just grow for the sake of growing. If you got $1 million in sales, we want you to get to 10 million because we can put a 10 times multiple on it. It's a 100 million multiple, and then we can take you public, blah, blah, blah. That's the game. Grow, 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 because we're growing, and we got to capture market share in this disrupting market. We've got to, and then we'll figure out how to be profitable after we, dominate this market. And you could go look at the recent results from Uber and Lyft. These are recent public companies. Hey, look, I use Uber. I think it's a terrific service. I like that seed investors and the original investors in the company subsidize my cheap rides, cheaper than a taxi and more efficient. But the company doesn't make any money. I mean, they lost $1.3 billion in last quarter. Same thing with Lyft. The drivers, any kind of metric that you look at, I've investigated this, they don't make money long term if you take into account the depreciation on the vehicle. I mean, it's just not sustainable. And it's all enabled by this sugar-fueled monetary policy that doesn't make any sense. We're in this bizzaro Superman world where everything is upside down. And at some point, this is going to end. At some point, when you're running a business, you have to make money. Now, I think what will happen is, at some point, I think, maybe I probably would invest in Uber or Lyft when it's selling for about 20 cents a share and everybody's forgotten about it 10 years from now and it's blown out. And then they get in there and, it becomes some kind of cash flow thing and, they make money. I don't understand how these companies don't make money. They don't own any assets. They don't own any cars. It's just all software, and these things are losing billions of dollars. And that's because they're subsidizing the rides to gain market share, to grow. Go on, look at Lyft's recent quarterly report. Look at their slide presentation. What they talk about is the growth. Well, there's another thing in nature that grows just for the sake of growing. It's a cancer cells, tumor. It just grows and grows and grows until the host is destroyed. There's no rhyme or reason to it. It just grows for the sake of growing. And that's what these companies do. And that's and I think that works until it doesn't work. We're in this, value is out. No one wants to be a value investor. No one wants to look at contrarianism. No one wants to look at beaten down industries that we need to survive, and put money in those. No one is interested in that. They want the flash. They want the pizzazz. That's what they want. They want these IPOs. They want Beyond Meat. I mean, I would never eat this stuff. 20, 30, 40 times sales. And then if you look at the WeWork IPO, there's a thing when you're doing like this type of investing, angel investing or seed investing in these growing companies, these private companies, and it's called total addressable market. You're looking for what's the total size of this market that you're trying to address, that you're going to disrupt, if you will. And they're saying it's like $1 trillion or $2 trillion. Really? And people buy it because that's what's fashionable now. That's what's in vogue. So, like I said, I mean, at some point you have to make money or the whole principle of the thing just doesn't make sense. And I think that it's obvious now that the economy around the world is slowing down. I'm not sure how bad it's going to get. I don't know. I don't try to prognosticate and predict the economy. That's really hard to do. It's obvious, though, from just the PMIs and other data that we're seeing that the economy around the world is slowing down. And, even the U.S. is beginning to slow down. I don't know how deep it will be. I don't know if we'll enter a recession. I just don't know. That's why I just try to look at individual companies or work on that vice just trying to figure out the macro. I have no advantage there. So I wonder, though, what happens if we do go into a recession and there's less of a demand for these things. Then what happens? These things can get stale real quick in that kind of situation where people say, well, there's a recession. Who's going to need office space? Boom. A meteor just came in and hit your business model. Thanks for playing. You're done. So I think, I don't know where we're at. I don't know how much dynamite. It's like a guy sitting on a pile of dynamite. I don't know how much dynamite there is. Gunpowder barrels we're sitting on. I don't know how long the fuse is to set the whole thing off. And I don't even know if the fuse has been lit. But that's kind of the scenario. And that's not a good place to be if you are in the stock market at all-time record highs for valuation. And I'm talking about normal stocks. You know, the things that we're invested in are contrarian type situations. And yet, look, you know, in the recent downturn, they got blasted also. You know, when a stock market goes down, I'd say 80 to 90% of the stocks are going to go down also. Maybe not as much if they're already blown out. Maybe not if they're counter-cyclical like gold stocks, which we are, you know, kind of focusing on recently. So there are pockets of opportunity. But I think if you're just in a S&P fund, or if you're just putting $288 a month into a mutual fund, you probably need to think about what you're doing. Now, if you're a long-term investor and you're going to hold through a 40 or 50 or 60% drawdown, which you won't, then I guess you'll be fine. But most people won't do that. They'll bite their fingernails off, get ulcers, and sell at the bottom. But anyways, I think we got a big problem here. You can tell there's a problem. Like I said, I just don't know how big it is. I don't know how it's going to end, but it's something you need to be aware of. Now, here is another example of what all these negative interest rates are doing. I saw an article, I'll put a link to it in The Guardian. You have the third largest bank now in Denmark paying people to take out mortgages. How are they doing that? You have a negative interest rate on your mortgage. They'll effectively pay borrowers 0.5% a year to take out a loan. You don't actually get the money. What they do is, you know, when you make your mortgage payment, they just reduce the amount by 0.5%. Now, the bank will end up still making money because of fees and stuff like that and charges that they have. But they're able to do this because, you know, rates, they can go into the money market fund and borrow money at even a lower interest rate, a more negative. So a less negative is better than a more negative. I mean, it's just how bizarre this is getting, guys. And you have all this currency laying around, paper piling up all over the place where it has nowhere to go. It can't get a return. And this is the kind of nonsense we're seeing now. I mean, how do you value, you know, the problem with having these manipulated interest rates by these central planners and these central banks is the fact that what makes a good investment, what's an investment hurdle or threshold? You know, there's some things, at 5% interest rate, some things don't make any sense because you can't cash flow enough to pay the interest on the debt that you need to create the business. Or if interest rates are at 8. So you don't have this ability anymore to really siphon out the garbage or who or what entity should even be getting loans or what business models should get loans. You know, can you imagine being a banker in this situation? You have all these currency units piling up and people are above you telling you need to get out there and get this loan book growing. Loan money to people. Well, how do you validate the borrowers? What's the methodology? What's the hurdle rate if interest rates are corrupted and they don't give you any feedback signals of what is a legitimate business or who's a legitimate borrower? I mean, I just don't see how this is going to work or how this is going to end well. So my view is that this does not look good. This does not feel good. Something is not right. It's obvious. I don't know how it's going to end. I'm just here to point these things out as an observer and tell you that, you know, you should not be messing around with these IPOs and this nonsense. And you need to really be careful about where we're at in the stock market with the valuations that are out there. Now, like I said, there's contrarian things that I'm invested in or speculating. I should call them speculations because we think that something's going to change. I mean, for all, you know, one thing I'll point out for an example that's counterintuitive. People would say, well, you know, the global economy is slowing down. Why was the Baltic Dry Index at record highs last week? See, these are the kind of things that you have to really be paying attention. It's the second level thinking. Why? Why are shipping stocks reporting better and better earnings and turning around, but yet the stocks are getting killed? because the first level thinker says, well, the world economy is slowing down. There's a trade war between China and U.S., so I'm going to extrapolate that to shipping and say, well, the shipping companies are going to be the first ones to suffer because they'll have less trade. The problem is what they don't look at is that's been the case for a while, also has been the case in the industry, that the companies went through a cycle of overbuilding and shipping rates collapsed. This is several years ago. And what happened is that precipitated a lot of bankruptcies, restructurings, a lot of removal of older ships from the fleet. And they've been sent to the shipbreakers. So you've lowered the supply of ships more than you've lowered the demand for them. And that's what, people, I think, sometimes forget. Now, that doesn't, the fact remains that just because these companies are making money, some of them, and paying decent dividends, that doesn't mean that people are going to recognize that and bid the stocks up. But I would rather own companies like that and do that kind of thinking than I would WeWork or Beyond Meat. It's the same thing with oil and gas. We are at depression levels with oil and gas and the exploration companies and the service industry. The service industry is in the worst, well, as far as the stock prices would indicate that they are in the worst depression ever. But the evidence, if you do the second level thinking, the investigation, it's the same thing. Well, the world economy is slowing down. There's a trade war. Energy demand is going to go down. Well, I think I need to probably take a look. I'm going to this week, and I'll report it out next week. I'm going to take a look at the energy use in the world economy in 2007, 2008, 2009, 2010, and see what the real dip was during the great financial crisis, because I think my initial thinking was that it wasn't that bad. Because here's the thing. With a world that's adding 80 million people a year, demand for commodities is going to continue to go up. Now, when you get to marginal oversupply, yes, the price of these commodities like oil can come down. But it goes back to what I said before. You're using up more of the commodity than you're finding or producing. At some point, that is an issue. And in fact, if you look at, even in Canada, which is the most blown out exploration and production companies, a lot of these companies are cash flowing massively even at current oil prices. It's just not recognized. People don't care. And, they don't care till they care. But yet everybody seems to think that there's not an issue here with paying people to take out mortgages or having what I show in my next chart, this growing pile of Subzero debt has now passed $16 trillion. Look at that chart, folks. Look at that chart. Go back to 2014 to, late 2014 when the thing started. Started getting into the negative interest rates. And look how it kind of got up to about a little bit over, 10 to 12, 10, 11 trillion in 2016 and kind of drifted, down a little bit. And now look what's happened in the last year or so. We're setting new records. The thing's going hockey stick as every central bank around the world is cutting rates. And the U.S. is too. I don't care what Jerome Powell says. We're in a rate cutting cycle. They're going to keep cutting rates. The market has an expectation for cutting for these reduced rates. And if they don't, the stock market will collapse. So that's really what we have going here. We have really got ourselves boxed into a corner. And I just don't know, how this is going to be good long term. This is a chart that people should really have burned into their minds. Look at this. This is Subzero debt. People are so scared that they're willing to give governments their money for 10 or 30 years with a built-in fact that if they hold a maturity, they'll lose money. Or with the view that the central banks will go even more negative and they can find a bigger stoop or fool to sell their bonds for to make a profit. I don't know. I wouldn't go near a government bond, a certificate of confiscation. That's what I call it. I wouldn't loan any of these corrupt governments a nickel. I wouldn't be involved in. This is the biggest bubble of all time. Is this government and corporate debt situation, and this thing's going to blow sky high. How can this possibly end well? With these low rates, negative rates, what do we have? We have zombie companies and countries that can stumble along instead of having to restructure. If you don't have to pay any interest, you can restructure your debt. This is what went on has went on, and it continues to go on in Japan. They've been in the lost decades now for 2 or 3 decades. You can't restructure the debt there. And we have a situation now where you have the zero rates or almost zero rates or negative rates. And now these companies that are barely hanging on can keep hanging on. Where's the restructuring? These things should be liquidated, and the capital should go to companies or areas that have legitimate businesses with legitimate prospects for return. What's the other thing this is doing? It's fostering more risk as people reach for yield. People are desperate for yield. I mean, when I was a kid, we used to have the little savings club in elementary school. You put your $1 a week in. They gave you a passbook savings account. I think you get 5 or 6% in a passbook savings account then. I mean, what do you get now? Nothing. People need a yield. They need a return. They have to live. You have pension benefits. You have, insurance companies have to match up their actuarial tables. I mean, how are they going to do this with no returns? So that's why people are going further and further out on the risk curve, buying crappier and crappier debt. Or, you see a lot of these emerging markets now, countries, like in Africa or Central Asia, coming to market with securities or bonds. And, people are buying these things. They're oversubscribed. And look what happened in Argentina. They had a 100-year bond. The thing's, having another currency crisis right on schedule. I mean, ask yourself, would you lend any of these governments money at negative rates for 10 or 30 years? Who's doing this? What happens in a recession and cash flows become constricted at these companies that are zombie companies? What's going to happen to them? What will the central banks and governments do? I don't know. What will they do? And how is this not good for gold long term? When rates go into the negative, you don't have any opportunity cost at that point for owning gold. I mean, gold doesn't pay interest or dividends, but if it's competing against a bond that has negative yields, and you're not getting any return, I mean, then gold becomes more attractive as a store of value as more and more people recognize, what are these governments and central banks doing? I'm not putting my money in a 10-year or 30-year bond where I'm guaranteed a loss. When I can hold gold, if I'm looking for security, I can hold physical gold and at least know I have physical gold. So they are adding fuel to the fire, the central banks are, to the impending gold rally, I think. Now, maybe I'm being a little naive on this. I don't know. But central banks are loading up on gold. People are buying gold. The gold ETF is continuing to add to its holdings. People are buying gold. They are getting the message. People are getting more nervous. They're looking for a safe haven. And I just want to remind you of this chart. It's a little bit old, but still, I need to update it. In a world of a bubble in everything, the only remaining asset class that is really cheap is commodities and resource companies. Now, I've been chirping on this since I've been talking about these videos for over a year and in my newsletter. And we've done okay in some things, and we've had some negative results in others. Okay? But at some point, this thing's going to turn. We are going to enter, this chart's going to reverse. Either one of 3 outcomes is going to happen. Okay? Stocks are going to go down and commodities stay down. Stocks are going to go up and commodities are going to go up. Stocks are going to go down and commodities are going to go up. I mean, we're going to have some mean reversion here, folks. That's one of my, prime things that I think are inevitable. Commodities, since the start of time, have been going down in value. They've been finding more and more for cheaper and cheaper in the price. But you have these certain times where you have this monetary excess, or you have these times when commodities are out of favor and come back into favor and cash comes into them and they outperform. I think that when you are looking at a chart, when you're at almost all-time lows, when you have commodities, things that we need for civilization to continue at all-time lows versus equities, stocks, I mean, I think you really have to take a look at it. So not much to really talk about specific to a lot of our investments. Continue to be bullish on gold, precious metals, just because of the things I talked about. But, we're in the summer doldrums. People are on vacation. I don't expect a lot of things to happen until we get into the fall. And as far as a lot of the things that I'm dealing with, we're just going to have to wait and see what happens, ride it out. So I think at some point, you know, the excesses in the market are going to correct themselves, and I think that people are going to start taking a look at the only asset class that's still cheap, and that's commodities. And I think when that happens, you're going to see a big turn. So that's it for this week, guys. Appreciate the support. If you do want to support me, please subscribe to this YouTube channel. It helps out a lot. If you'd like to leave comments, we appreciate the comments. We try to respond. If you're a troll, I mean, please don't. You know, I'm pretty good at lambasting people. Don't start it up with me. I'm just going to spam you. I don't really have time for it. If we want to have legitimate questions, if you have a disagreement with me, as long as it's done respectful, I'm happy to debate. I'm happy to learn things from other people that I didn't think about. But I don't like when people get on here and tell me that I'm stupid, or, you know, regardless if I am or not, you know, no one likes that. You would never do that. Believe me, you would never call me stupid to my face. So let's be respectful. Otherwise, I'll just spam you. We have a lot of guys that are, you know, comment on here. We have a lot of discussion. People have changed my mind on a couple things, and, you know, it's done respectfully. You want to get on here and troll, you know, take out your psychological issues on another forum. We're not interested in really listening to them here. So that's it for this week, guys. Appreciate it, and we'll talk to you next week.